Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community? Well, thank you and good morning. Thanks for visiting the Trader Lab. I'm your host, Tom B. Thanks for visiting us today. Uh, we have our Fed testimony going on in front of Congress. It's a very much a event, kind of a dog and pony show, in my opinion. Where Congress gets to grill Fed and Treasury, and et cetera, and very, very interesting and always quite colorful. So that is what's driving the market currently, and we will be getting into that and how you might understand the potential for a day like this and how you might navigate it. And please remember, this stream is based on structured trades that are available to everyone in the Bookmap Discord TraderLab chat and community. It is about integrating Bookmap order flow tools, how to see inside the market, using the auction or the behavior of the participants, and building these strategies on top of the volume profile. Volume profile is really a chassis for seeing the distribution of volume, and really volume is very similar to how your supermarket works. It's kind of simple in some ways, because if prices get too high, you'll notice even in your store, buyers will not buy it. The volume will taper off, even though some buyers will buy a product that might be overpriced. If the product goes on sale, while intuitively you might think that there's going to be a huge amount of volume when it's on sale, the differential is that these sellers will not keep it on sale long if they see the demand. They'll raise the price back up. This is what creates movement in the market. This is really the basis of how the market works. And again, this stream will help you understand market mechanics, how the market works, why it does what it does, and how you might get in alignment with it using structured trades that are available for you to reverse engineer, download if you visit the Bookmap Discord TraderLab community. Plus, the community in and of itself is a 24-hour, 7-day-a-week community built on traders with all different levels of experience in the market, from newer traders, developing traders, and very experienced traders. So it's open to everyone, and of course there is no cost to be part of the Bookmap Discord TraderLab community, and that also gives you access to all the other education that Bookmap provides. That stocks, options, crypto, order flow with a high-tier tool like Bookmap, options, market maker behavior, algorithmic behavior, and much, much more. And all this is available. The path, as they say, of least resistance is if you click in the bottom of YouTube, you can visit the Bookmap Discord TraderLab and then go from there. And don't forget, if you are a subscriber to Bookmap, there is specifically the Bookmap Academy, where you can get individual coaching, mentoring, critiques, and assistance to build out your business of trading. And the Trader Lab is all about the business of trading, understanding the mental aspects of it, the challenges we face, and also building out structured trades. Structured trades, quite simply, are vetted trades, trades that have a statistical edge. The business of trading is not about creating certainty. Our wiring seeks certainty. The business of trading, in my opinion, in my experience, and this is going on 45 years now, it might not be true for you. Everybody's different. You have your own truth. The business of trading is like gaming. If we can understand gaming, or how casinos work, we can understand trading. The idea, and in my opinion, is to only interact with the other participants when you have a statistical edge. Casinos don't play games where they don't have an edge. They also don't change the games based on the outcome of the last one. Our obstacle as developing traders is to differentiate between being out in the world we're used to and then being in a world of complete uncertainty and randomness. You need to understand the psychological aspects of how this impacts you and how, even though you may have intentions of certain behavior, that basically what you do is hijacked by something else. This is the emotional aspect and the psychological aspect. And of all the things you may encounter in your pursuit of a career in this business, it is the most underrated and the greatest obstacle. I believe if you come to TraderLab and do the work, that almost anyone can learn to trade. However, being able to trade is a separate element and is much larger than something like a structured trade, which you can all have at no cost in TraderLab. So let's get going. Let's look at today. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab a pen and a piece of paper. I'm going to give you a couple statistics today. And also, please remember, today is an important day for potentially fundamental inputs. That means external inputs that may disrupt the behavior of the participants, or shall we say the auction. That's because of the testimony going on now up on Capitol Hill. The other piece to this is the link in the bottom of YouTube. If you want to access the Bookmap Discord TraderLab community and download the 60 PDFs of structured trades I'll be reviewing here in the stream like I do every day, you're welcome to it. And there's no cost to that or accessing the library of webinars, the community, the statistics, and trade plans, and much, much more. It's all available to you. In addition, the psychology of trading. I did a 1.5 hour audio discussion, if you will, but pretty much one-sided. Audio discussion of psychology. It is available to everyone in the Bookmap Discord TraderLab community and chat. And if you're in YouTube, you can use the link in the bottom of YouTube to access these. Now, grab your pen and paper. And don't forget, if you're in YouTube, post your questions if you have them. If you're in the Bookmap Discord TraderLab community, same. Also, please give a thumb up if you're in YouTube and subscribe. And remember, there's no cost. So let's look. Write these down. We are opening higher inside of yesterday's range. Higher refers to where we are in relation to the settlement price, which is below us. Now, some of these levels may be off. I've been having a little bit of a computer challenge, so be sure to check any levels you see here. Yesterday's high, which was the all-time high, RTH open, overnight mid. Here, I'm going to give you some of these. So, opening higher inside of range, write these down. There's an 81-ish% probability we'll either check the previous high or previous low. I would suspect it might be the previous high, considering where we're opening. What do you think? Also, the overnight mid, or ETH mid, a 72% probability we'll get here. The previous value area high, approximately a 70% probability we will get there. The previous settlement, about a 70% probability we will get there. But we did check it in the ETH low. Just saying. Doesn't mean we won't get there. The overnight high, a 69% probability. We'll take this out, and of course, who knows? And the overnight high, and then the first hour's high, about a 68% probability. So this is the first hour's high, and I believe it was the overnight high also. Maybe might be covered up. Can't tell. Is everybody tracking so far? These are called statistics, right? Why do we want statistics? because it gives us a sense of probabilities. And if you accept that this is a random environment, then we need something to give us some guidance. It's not a prediction, it is guidance. And in my world, the more you get in guidance, the more, and it's called probabilities, the better you might skew an edge to your benefit. And most other retail traders do not think this way. They are hung up and focused on prediction and risk aversion. The thing that's counterintuitive about trading is we should understand why we are risk adverse. But being risk adverse doesn't serve us in the trading world because we're taking risk intentionally. But our wiring and our habits that we develop over a lifetime, security, right, are counterintuitive to the business of uncertainty and risk. So we're constantly going to be pushing against primal instincts that will become potentially the largest or greatest obstacle you face in this business. So now there's another piece. Let's look. I'm not sure if all my levels are right here. Hold on. I'm missing overnight volume point of control. Let me see if I can find this level. 5638. Yeah, it's covered up right here. It says VPOC, but underneath that is the ETH volume point of control. This is the ETH right here. Okay. Whoops. Hold on a second. No, it's not. There. This yellow line represents the highest volume in the ETH. So why would that be important? What it is showing us is as we go up in price, and this is, I believe the overnight high is up here someplace. There's less buyers. If we rotate down in price, most of the volume was done right here, 7,830. And I'm hoping these levels are right. I've been having some problems. Hold on. Yes, it is right. And then as we go down to the ETH low, this seems incomplete, guys. I apologize. I've been having some software issues here. Not related to Bookmap. It's related to a cloud notes and other inputs coming in. So things are out of whack. But the idea is this is high volume. So let's go take a look at how this works. So we have yesterday's high. You already have the statistics. We have this, and we have the overnight high, which is, I think, up here someplace, all-time high. And we're opening here. So what it is suggesting to us is the possibility for two-sided trade. The overnight high is the closest, pretty much the closest statistic we have above us, and then below us, the overnight mid and the value area high. So this. So for me, I was looking at this going, well, this is going to be my kind of my sandbox for today, and I'm going to be trying to trade it from both sides outside in. So that was my plan for today. And here's another piece for this. And this is not technical. This is a little bit more fundamental. When you have the market is long, you have testimony going on and grilling of the Fed by Congress, Senate, I believe today, House of Representatives tomorrow. What might happen? The longs might be nervous, so you might get some profit taking, and the vulnerability appears to be, I think, for the longs more so than the shorts. Now, if this testimony finishes, that all can change and that input can change. So that was my thinking coming in. And what I think doesn't matter. I just want you to know, because my thoughts are as good as anybody else's. The outcome of everything is random. So then it's structured trade. So let's go take a look. And remember, if you have questions, please post them. Costello, I get the question in YouTube. Is it possible to skip mean reversion and only trade continuation? Yes, you can. But here's the thing. If you're in mean reversion, that doesn't necessarily, if you're in two-sided trade, Mean reversion is outside in trading. It is not continuation trading. You may be able to take structured trades, but it will pull back to the you can see the condition of the market today is rotational. The other thing might be is it's not taking the continuation trades if you're in a mean reversion environment. I just want to clarify. If you're in a moving directional market, continuation trades are appropriate. But the actual trades, and you can see this in the 60 PDFs you can download. If you haven't done that yet, use the link in the bottom of YouTube and download the 60 PDFs of structured trades. You would know not to take continuation trades in mean reversion. And then if you don't have a mean reversion plan that has an edge, then your job is not to trade. Because then it's preservation of capital and just waiting for your edge. We all define where our edges lie. And if we're in mean reversion, then you basically pull out a mean reversion plan. They're not the same thing. And that's part of what we do in TraderLab. Most traders are trying, and I'm not referring to you, I'm saying generally speaking, most traders don't understand something called context. Context is really how the market works in the sense of it's in different conditions at every time. And we see this in all time frames or fractals. What happens is the market gets directional and then it gets rotational. It can become directional, rotate, and then continue on. Or it can get directional and then revert, come outside and then revert. They're different plans. And then if the market transitions to a different condition, your plan needs to change. It's like driving on the Autobahn, pedal to the metal, and the other times it's like driving through the mountains on a winding road, and you have to drive differently. Well, it's the same thing in trading. Sometimes we're on the Autobahn, and then we end up going up in the mountains. Then we come out of the mountains, we're back on the high speed. It's all variable. So the thing is defining conditions of the market and then adjusting, and you don't know exactly what's changing until it has. We don't have clairvoyance. I know we all would like it, but no, we don't. But what we have is a way to define conditional behavior, and that's called narration. I covered this in the TraderLab, and in fact, everyone, if you haven't done this, click the link in the bottom of YouTube. You can access the Bookmap Discord TraderLab community. There's no cost. Watch the library of webinars. You'll see this behavior and these descriptions. Some of these are live, real time. Up to 4.5, almost 5 hours long of real-time narration. You'll see the transitions from directional trade to rotational trade, back and forth, and then continuation trade in all time frames and fractals. One of the things to understand is there are some traders who are going to put a trade on and go for 8, 10, 12, whatever the larger rotation is. There's other traders who are, quote, shorter time, and by the way, define scalping. What's that? I mean, I know what it is. Do you know what it is? We all think of it differently. And some traders are just going to trade a couple of points because that's their comfort and it aligns with them psychological. Anyway, let us continue. So this is the RTH open right there. So what I'm anticipating is potential selling. I have yesterday's high, all-time high, and look where I'm opening. So two-sided trade. So I'm looking to see who takes the ball. So my anticipation this morning was longs potentially getting out first, so selling, and then see what happens next. In other words, go down, get to the overnight mid, possibly reverse and mean revert. So that was my first idea. So I'm going to show you. I took a short, coming right out of the hopper here. Took a short here, stop over here, looking for overnight mid. This is my first trade. I'm not saying it's brilliant. I'm just saying it's a trade. I don't go much further than that with it. Come back and check here. At this point, I have my sellers hit it here. My buyers are trapped here. This is absorption. This is microstructure. I also always say this, and I'll continue. This is not where developing traders should trade. This is where developing traders should narrate to develop an understanding in compressed time what is happening here. So what happened right here, this is micro. My short was here. Now, when I say here, by the time I push the plunger, I'm in over here. The trigger was here. The test of this microstructure was a short. So up, seller, buyer here. This is retail. This is high volume. Remember shopping. Right here, it shifts down. I see a buyer here. I have this here. This is micro. I am in about 9 seconds. I'm making a decision to go short at 9 seconds in. Not recommended to anybody unless you've operated at a level of unconscious competence. But you can develop it by just narrating, because your mind needs to be able to recognize without translating. It's like speaking a foreign language or playing a musical instrument. You're not translating it. You don't see a note on the paper and go, oh, that's C, C, if you're playing a piano, or F sharp. It's just bang. Same thing with language, same thing with trading. In speed. Now, when you are further developed in the sense of structure, you will anticipate it. Here it is, there's no time. So I want to make a point of that, but you can learn to read it. So this is my short. Now, when I see this, I'm executing here because I cannot execute. By the time this registers in my brain, I'm sitting here. Click. Stop. Watch. Come back and check. Ready to lose my breakfast. Resistance is here. Stop is here. VPOC migration. Feeling good, Lewis. Right now, this is telling me at the moment, looking good. Let's talk about the language. First of all, I got to label this. I'm going to label this one too. Variable high volume node. And by the way, I know you guys watch the stream and I appreciate you taking the time. If the market is random, if you can accept that, and we have no control, which I hope you can accept. In other words, we're in uncertainty and randomness, just like casinos. Now, you don't have to accept that, but most retail traders spend their potential careers, no matter how long they might be in them, looking for certainty because they're wired not to be in uncertainty. Our nature is predictability, so we seek it. Isn't that a natural thought? But what about the environment we're operating in? Can we create certainty? Or maybe we should not work on certainty. We should work on probabilities. Thinking in probabilities is not seeking certainty. That's a difference. Your mind is geared for certainty, predictability. Trading is not. How do you mix the two together? Have you ever thought that maybe you can't? If you can't execute, have you ever wondered why? It's all psychological, assuming you actually have an edge, which is the work you got to do. And you could do that in TraderLab. That's what we do in TraderLab. Now let's watch. This is too high. This is too high. This is the short. This is the stop. This is stomach twirling. This is looking good, Lewis. VPOC migration is saying there's more volume here than there was up here, which is logical. We didn't spend time here. Now we're chopping here. I have my buyers here. I got these guys were stuck. Sellers came in here. So far, so good. Going for this. Let's watch it. Now what? Watch. Right here is VPOC migration. So far, looking good. Let's watch it. I cross over. Right here, the trade is in trouble. So, eject. Okay? I did not, this was my target. I did not accomplish anything with this. Okay? Stopped myself out, took a loss. When we came right here, the trade was in trouble, and I cannot respond. I come across here, I see my buyer, I blew out of the trade, and I took a loss. And I said, well, okay. Now, I also know the ETH high has a high probability. So I also knew that. So I took this. This was aggressive. I paid for it. You know, it's kind of like, yeah, thanks for playing. So now let's watch. When you come across here, now watch this. This was too high. This was too high. This turns out to be too low. Very clear in hindsight. No way to deal with that for me. This was too high. It is resistance based on this and this. This little structure up here is resistance. You guys know what this is. Resistance is here. See where we pause. Break high. Now what? Watch. Test. Potential long. You see it? Now, guys, I understand. Now, I don't use indicators. And you might call this, let's call this an indicator. What is it? An indication of behavior and participant valuation of the product. So while I don't use this typical toolbox plug and play indicators that most traders use, and I'm not saying you can't use them, I'm saying is they didn't work for me other than randomly. So I kind of did something different. And what I did was I said, well, what is really going on? Not what does the indicator say, what creates the output to the indicator? And a lot of us think, well, it's price and a derivative of price, a moving average, an oscillator, doesn't matter. An envelope, a VWAP, yeah, matter. It's all derivatives and measurements of something. Fine. We draw a line, it's the same thing. Have you ever moved a line on your chart because it didn't quite fit? Have you ever tweaked an oscillator or a moving average to get it to fit better, or your envelope? Or if you're using a Keltner channel, instead of a 20 SMA, maybe you go to I don't know, a 10 EMA or something, you know, whatever. Have you ever done that? That's called curve fitting. That does not work. It is the need to be right that drives us to try to tweak and tune. I did a webinar on it called Trader Groundhog Day. When we come across here, so you understand, remember, I don't use indicators. Nothing wrong with them. It's, do you understand the condition of the market to apply the indicator? They fit, but they don't define the market. The market defines the output to the indicator. That's the differentiation. Can you differentiate? Or are you just trying to curve fit and get something to work? One thing that's really important, and I didn't understand this early on when I started, which was 1980, because nobody was doing off-floor trading. All my buddies were floor traders. And, you know, and back then it was trend following, and, you know, short-term trading was 2 to 3 day swings, at least for me. So this is our support. Right here, think of this as, if this is too low, and this was too high, what happens? Resistance becomes support. Resistance becomes support. See it? That's a long. There, right there is a long. Watch the behavior. And then north. That is a structured trade in TraderLab. Now, it might not be yours. I'm just saying it is. So let's watch. So where do we go? Up we go. And where was the ETH high? I believe it was 56.40. This is the target here, the overnight high. So the trade from here was to here. So what I did is, of course, take a stop. And I went, okay, that was my plan. Guess that didn't happen. What's the next trade? Here to there. Then what? Manage the trade. Let's look. Now I'm going to take you into microstructure. And if you have questions, please post them. Now, with the way I tend to operate is this yellow line is showing me the developing volume for the full day as it moves around. And it's very sensitive at the open because there's no volume. It starts at 0. So as volume comes in, it's going to be bouncing around. As more volume comes in, it becomes less sensitive. Then what I do is, and I call this trading in fractals, I move into shorter time frames. So I'll look at this. The chop, chop, chop is a consolidation. You can see it. The volume is in here. If I break away from it, that's fine. This is saying too low. Now I come up here. Let's look at the same behavior. Chop, 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 chop. What do we want to see happen here? Now I got my target, the overnight high, and I have no clue what's going to happen after this. You know, it's one of the thrills of randomness. I'm going to mark this. Now I'm going to mark this also. Let's just throw this in here. And we'll put another one in here for that's the one up on top. Now remember, we're in the, I don't know. There's the high volume. You see the node sticking out on the right. This is the volume. What this is showing me is, and this is a consolidation, high, low, high, and this is the low, break. Watch. So I'm going to draw another little thing for you. And this is how I manage my trades. I'm not saying it's good. I have no idea, but it helps me because you guys all know probably what a consolidation is, right? Right. So what do I know about this? I know the high volume is here. I see my buyer here. I see my seller here. There was a seller, got absorbed by the buyer. Now, right here, this is absorption detector in Bookmap. What it tells me is I had sellers, market orders, buyers interacted with the seller and absorbed the seller and then marched forward. Okay? 58 buy stops coming out. Now, we're coming up, more buy stops coming out. Buyer, buyer, going to the moon, Alice. Watch. Now, I don't know. You know, I'm clueless, truly. No buyer here. Now, there are buyers and sellers everywhere. The fact is no volume. So I see no volume here. I have a seller. I have a seller. Seller here. And remember, the sellers were absorbed here and absorbed here. Here. Seller here. If we don't break down here, and now I see a buyer, and the buyers take control, and I'm going into minutia. This is how Bookmap can help you. These sellers were absorbed, and now the buyers. Now I'm saying the buyers because I don't see the sellers. Do you? And we're above the sellers. That means they were absorbed by buyers. So we come up here. Now, and don't forget, overnight high. So I'm looking at this and I'm going, well, am I going to, what's going on here? Don't know. But watch. The volume is here. So here's a seller. I see my sellers. I see a buyer. What's the difference? Now I'm taking you in the Bookmap, and I hope you guys can appreciate why it is so important to have order flow in your life. Because what is going on in here? If you're looking at a candle or a bar or whatever it is, in my opinion, you're not seeing anything. You're seeing chop. What I am seeing is the participant behavior. Here, buyers. They didn't go anywhere. I come up here. What do I see different? Sellers. Now, right here, I got a seller. I got a buyer. Clueless. Let's look a little further. What else do I have here? 15 buy stops. Is that a little different than 91 over here? What might that mean? Might underline. Exhaustion. Don't know. It's a suspect. Right here, I've got location. I've got my volume in here, and this is now a consolidation. I don't know anything more than that, but that's a lot. I see a selling iceberg here. I see absorption here. That's selling absorption. Here's a buyer. The sellers are active here, are active here. Is that different than the buyers being active here? It's nuanced, it's micro, and I already know I want to get short. Now, watch. Break low. Now it's a structured short. Where does it come? Let's come back. Now, right here, this is a potential short. As soon as it breaks down, you could be selling against here, this outside edge. This is now high volume node, and this is a distribution. Let's talk about what this is real quick. So what this is I'm not paying that. Oh yeah, it's on sale. That's what these guys are saying. So right in here is the outside edge of this. So if I break out of it, think of a consolidation, I can pull back and test it out here. So let's watch. Where do we come? Out here. This is where I got short. I wish I got short a little better. Over here, not so much. And I'm only risking a couple of points. You notice it comes back here and test it. This is another TraderLab entry here. So you have a couple ways you can do this. You can enter here. You can, or you could put your limit order right around here and you have a fixed stop up there to start. You'll see, and there's actually more you can do, but I start out that way. Once I break down, what is this? Too high. Stop is behind here. I put it like right here. I get scaled. Watch. And I get taken out. Now, just showing you trades I was taking. I'm not saying these are good trades, by the way. Just taking them. I just go whatever. 9 o'clock, 9 a.m., we take out the first hour's high. That half hour's high. That suggests we're going to take out the first hour's high statistically. Probably. Don't know. Maybe. So I'm now aware of the first hour high having a high probability. However, I'm still thinking I want to get short. So let's watch. I come up, 9 o'clock, break. And this looks like some pretty good selling. I also know at 9 o'clock that the Central Time, that the testimony is supposed to begin. So I'm kind of trading a little bit about this report, or I'm treating it like a report. So here I have my buyers. I see this selling. This seems uncharacteristic to me. Let's watch it. Micro high volume structure right there. Same process. Let's watch it. And I hope this is useful for you. I'm in minutia today. I'm kind of doing it so you can kind of see how you organize behavior. Let me draw the next box around it, the little structure, so you can see consistency. Could be here, could be here, so like around here. Let me see. Yeah. There. So here, this is a consolidation. Breakout. Now, where's the high volume? It's that node right there. And there's the line. So I'm looking at this and I'm going to take a short. And I'm also thinking, what's wrong with you? Except I'm reading it and I'm going, well, this I know has a high probability. I know now the market is long and I know I've got this thing starting with the testimony. This is a short for me. This is resistance. So break, short, high volume, test, short, pull back. This is resistance. Just watch it. And remember, everything's random, you know? I just want the trades I take to work. I don't want to, I just want to be one and done or two and done. So what do? Short, short. Let's look at the microstructure. High volume, too high, leave it. High volume, leave it. Where am I trying to go? Great question. Overnight mid. And my next target is this, value area high. So my shorts were towards this. Seemed like a good idea. Notice the retracement. Let's just watch. Came down here. So I got my overnight mid, got my scale, and going for value area high. That's the last trade I took, I think. Yeah, then I had computer problems. So that was it. Now, let me explain the exit from this trade. So, and then I'll look up, see your questions. Thanks for your patience. These are structured. And by the way, what I do, I'm just following what I do. The thing about the behavior, once you understand market mechanics, you can pluck these structures out and plug them into what you perceive to be the context. My perception of context is an upward skew, but balanced two-sided trading. So, and I was shooting for, if you will, taking out the longs, especially the ones who bought this morning, because the market goes up to go down and then goes down to go up. So this was the short. Now let's look at the change in behavior, and then I'll look up your questions. Thanks for your patience. This is absorption. So we have big selling down here. This is why I was looking for the shorts. 1,400 sell stops coming out. Thanks for playing. Look forward to that gift basket from your broker. And big selling. So those are stops. There's absorption. That is telling me there's buyers on the other side. 569 icebergs. Isn't it nice to know that you just don't sit here and you go, well, I guess there was selling there, that you know there was stops, absorption, and who was the absorber? Icebergs. Big order. I mean, look at this over here. 35, 22, yawn, 569. I have alerts set in Bookmap. Wake up. Large iceberg order, outsized. So that right there tells me this could be a problem for short going to here. So let me show it to you now. So now we know there was an anomalous event here. Okay, it's not just a walk in the park. It is anomalous. 1,400, 569. Absorption. And what else does this tell you, by the way? If you understand order flow and market mechanics, which you can learn in the Bookmap Discord TraderLab community, this is the absorption means these sellers, if there's new sellers in here, now we know there's stops, we don't know who's who, they were absorbed, they are stuck. This delta is what's represented in here. The market is short. This is only showing me what's on the screen. The volume profile, the chart volume profile is only showing me the volume right here. This is showing me the whole volume for the whole day. So I'm on an outside edge here. And I don't know, right? So let's watch. Let's see the change in behavior. Where's the volume? Let's look. Volume is here. Seller. Resistance, seller, resistance, seller. This is microstructure. This is resistance. Notice, see it? But I know what happened here. So the possibility is to come back and check this area. But I know when I see this that there could be trouble in River City. So I manage my trade and I get taken out. And look where we come. Here's the beauty of understanding what's going on here. So we know this is too low, maybe. and it's always maybe because that's all you got in this. I know this is too high. So right here, you could be out of this trade, or, and here's the other piece, and this is not a recommendation. What happened here? What did we test? These guys right here. We come down here. Too low. If we don't get selling below here, and notice what happened here. Here's another telltale sign. This is minutia, but this is order flow. Watch. We know what happened here, right? What is this here? Sellers. Absorption here. The buyers are here. The buyers are here. Notice. Buyers. Buyers. I come down. Now watch. Sellers are here. Buyers absorbed them. We come down here. What is happening here? Nothing. For the longs to get thrown under the bus, we have to come under that absorption to the left. Sellers, so look, sellers, they're absorbed. There's a little green box. Buyers, pull back to these guys, this buyer. Absorption. Sellers are trapped here. Sellers are trapped over to the left. I see my sellers. I see my sellers. What's not happening? They are losing. Buyers take over. Stuck, in other words, absorbed. Absorbed, you can see it there, and going back, absorbed over there. This sets up a long. Now, if it's not in your plan or your thing, nothing to do. But I want you to see how you can develop an understanding of market mechanics when you use order flow. Does that make sense? And I'm going to look up for your questions. Thanks for your patience. Did I miss a question? In your experience, Icos, Bookmap, why are you talking so much? Is your Bookmap talking to you, Ficos? I don't understand. Sitstock, the link to the 60 PDFs of these structured trades are available. You click the link in the bottom of YouTube. It'll take you to the Bookmap Discord TraderLab community. Ask in there. There's a pin. You can download those, the statistics I reference here in the stream, and also there's a library of webinars. I always suggest you start with the primer webinar. It's about an hour, and it gives you an overview of this process and the business of trading. You know, I mean, trading is a business. It's not a video game. I know we like to have a lot of fun, but I think arcades are better or just play at home. You know, but this is business. So if someone's interested in the business, this is not easy. Because it's not what we think it is. And, you know, we get a software toolbox and we think the ATM has just unlocked the right mix of indicators and timeframes. I'm going to suggest not so much. Now, maybe it is for some, but I've never met them. Doesn't mean they don't exist. The thing that gets us, I think, really hung up, at least it did for me, because I built trading systems eventually in my career. When I was managing money and I was a trend follower, remember, so a different business, but was that things would work. And what I didn't understand, I would look at the totality of all the mix of various indicators and optimize them. It was very much math and derivative indicator built. They had a lot of stuff going on in there, conditional statements and then branch logic. I'm telling you, this thing was pedal to the metal. So I was looking at collective statistics, you know, like the overall profit and loss, you know, ratios and profitability and all this drawdown, you know, kind of stuff when you're doing systems. And it was across multiple asset classes. So it was very much about trying to fit the market into an optimized condition with the expectation underlined that it would replicate over time coming out. So I was on a schedule of re-optimization. But what I was really didn't understand at the time and no one ever explained it to me, and I didn't figure this out until years later, as I was trying to fix a defective process. I had statistics, but I was in the past trying to make the present condition of the market align with previous behaviors. So I could never really be in the right place at the right time. And the assumption underlying was that it would kind of filter out and shake out over time, even though it's random. It didn't. It would break down. So what I figured out was that when you have random inputs in a random environment, things are going to work randomly. Now, that means if you don't have an edge with what you perceive to be a repeating pattern, it is random. Gamblers win. So does that mean they are profitable, or does it mean they just won because it's part of the random distribution of outcomes? If I have a trade, let's just call it a setup, or what you call a setup, and I don't have it anchored to specific inputs, so it's absolutely duplicated every time, I can't measure it. But because of that, even if it is anchored, which it probably wouldn't be for most retail traders, because I see it work sometimes, I'm going to keep persisting to make it better because I have belief it's the right thing. Well, look, it works. I just got to make it better. I call that trader Groundhog Day. You may find that I'm just repeating something I've said many times before, that if you take a trade 30 times, it might win 10 times. But over the 30 sample size, it's a guaranteed loser. If you knew that, would you keep trading it? Or would you keep just trying to fix it and make it better? If you can't measure it because it had random inputs, now you are the gambler. And that's what they do. And gamblers over time, even though I'm sure there's gamblers who succeed, most of them don't. Just something to think about. Does that make sense? And let's move on. So, too high, seller, south. Okay, same thing, south. So what is this? So I'm thinking two-sided trade. Remember, I'm trading something called mean reversion, which is outside in, outside in. So I know this has a high probability. Now I'm going to show you the trade. I was not able to take this because I was having computer problems. So, but this is a trade I would short, and I want to show you the structure. Now let's come back. Where did this come from? Let's just make sure I got the right level here. Here. Huh. This was too high. There's your seller. There's your test. That was a short, right? Now let's move forward. Remember, too high. And there it is, too high, and that sets up our short. Now I'm using triggers. These are TraderLab triggers. Here, absorption, right? Just watch behavior. Back up here, just watch behavior. See if you just don't see something that's kind of consistent. This was our absorption, right? What's this? Test, absorption. Let's look at the same thing. This is order flow again. So right here, buyers going to the moon, Alice. I see my seller here. Now the thing is, when I see this, I'm going, well, who's going to win? I mean, look here, we had a seller. They blew through it. Uh-oh, well, that's no good. These guys have a problem. But I'm seeing selling, and the buyers are getting through, you see? So right here, I know I want to see what happens here. Well, they're still going up. I see a seller here, seller there, seller here. Is that too high? What happens? Boom, going to the moon. I see the seller again. I see the buyer here. Where are we going? I see the pullback, and now, and I'm at a location, don't forget. There's my seller. sellers, buyers here. Buyers take a shot. Watch. Right here. So this is my reference. And I don't know. Forget, I got my sellers here. They got absorbed. So I got my buyer here. I'm looking at this. I go, hey, that's nice. Watch. Break. This sets up a short. Let's look at it. The high volume is now there. There's the change in behavior. Let's just see what happens. I'm going to mark it. Now when I'm trading, I'm just mentally, I just see it. I'm looking at this. So I go, oh, there's the high volume. And I do at times mark things like this so I don't forget what happened once it's off the screen. I just want you to know. So right here is one more little box. Break, there's my seller, there's my test. Why? High volume, plus that's high volume from before, breakout of a consolidation, pull back to the volume. It's right there. This is a TraderLab trigger. This is your entry. Your stop goes there. Now, off you go. Now, this is called mean reversion trading. This is the mean. So in this structure, this is the mean. So this is the same thing, but it's a fractal. Fractals are like Russian dolls, little ones inside of bigger ones. For the day time frame, this is the mean. If I break away from the mean and come back to it and it's too high, I'll leave it. In the next fractal up, the daily time frame, this is the mean. So if the mean is too high here, then it's mean reversion to this mean. Then the possibility is to come outside and then revert back. It's called mean reversion trading or rotational trading. It's a specific trade plan in TraderLab. Let's just watch it. By the way, this is the target I was trying to go to, remember? Value area high. I don't know if we got it. No, we didn't get it yet, if this is accurate. So the shorts are still going for this. And unfortunately, I couldn't take it. Very frustrating. But that's life. Absorption. Remember this. You saw it before. And then I'm going to be pretty caught up, I think. Buyers are here. Let's look at the behavior. What do I see here? Now, I don't know. When this stuff happens, I go, I can see it, but I don't know. I mean, nobody knows. So right here, I know right here. Let me show you what I know when this happens. I know nothing, first of all, on the way down. I'm going to take you to the micro. Here's your volume. There's your break, microstructure. I have no buyers up here. I come back and test it. Also the mid, neither here nor there. Break low. This is too high in the micro. The volume is there, right? There. So I'm able to use this viewpoint of auction to kind of get a sense where one side is active and the other side is losing the battle. Here's the next layer of high volume. No buyers. The last buyers I had was here, absorbed. Here, absorbed. Sellers. Where's my buyers? These guys now are stuck. Sellers take control. Sellers in control. Break. Micro high volume. Test. South, volume, break low, micro high volume, there, break, test, there, Trade's over. Subject to, no. Now, here's what happens. When we come down and I see the absorption and I have an iceberg executing, I have 154 stops coming out here, and I only have 33 here, and I have the absorption. Again, this is how Bookmap is helping. Now, I don't know at all where the low of anything is. I am going, or was going, for this. And if I had this trade on, this is still my target. I trade the statistics. And there's a decent statistic that I might get here, which I gave you at the top of the stream. So here's my volume. There's my break. Now, the market also has a tendency to come down and check them. You've seen this before. Here's your volume. Here's your break high. Here's your test. Now, remember, this is where I would be getting out of the trade. And the reason is I'm not in a directional market. I'm in a rotational market, and it's mean reversion. Very important you understand. The nature of this is to come back here. So that's the last, and I haven't seen the rest of this. Well, let's go look. What's going on? Remember, we have a high probability of taking this out. It is, and I'll look at your questions. Thanks for your patience. To take out the is about a 67% probability based on our statistics available to all of you in the TraderLab, and there's no cost to visit TraderLab. And of course, past performance is not indicative of future results. You got to vet everything for yourself. Agent Smith, how do I get the CLN column? You could go to knowledge base there at Bookmap. They explain how to set that up. I have two of them actually. Different ones. This one is levels, and it's off Investor RT, which is my higher time frame. It exports levels into a CSV file, and then it's read. And then this is my short time frame. It only identifies high volume nodes. That's the one that's been giving me trouble. And it's strictly a internal problem, not related to Bookmap. It's on in my trading computer. Let's look at the behavior. Now, these are not trade recommendations. Let's watch the behavior together. What happened up here? Selling icebergs, selling icebergs. Buyers are here. Now, statistically, this has a high probability. So, but let's see if we mean revert. Now, for those of you who consider yourselves scalp bears, this would be the target, and it's not a trade I can take. It just doesn't pay. Risk reward, you guys have heard of that. So, but what you can do, if you understand market mechanics, you could continually narrate and observe. If we know this price was too high and I see absorption, then the possibility is to come here. Not a trade. It's just market mechanics. Remember, the statistic favors taking this out at some point. And like everything in trading, it's random. So let's watch the microstructure, which is this. And so there and there. In here, this volume here, micro, is potential resistance. Buyers are trapped here. They were absorbed. Let's see what happens. So right here, it's either going to squeeze the sellers out in this leg or get the buyers out from here. And the target would be back here. This is called mean reversion. Is everybody tracking? Passive buys, sells. Oh, hi, Agent Smith. Yeah, thanks for the question. This is icebergs. This is really showing me who's absorbing. The passive side are the limit orders. So it's showing me the icebergs. So like up here, it was probably showing you the passive sells. all it's doing is it's just an audio alert. Now, there's multiple ways you can do this. It could say, you could have this set to a level, an amount, like, and it'll say selling icebergs, alert, or here I have it set to audio. So because sometimes this will appear on the screen and I don't see it. I mean, by that I'm saying is I'm focused over here. I don't recognize that. So I hear this. So let's see how that works. There's absorption. That's passive. Now let's see if an iceberg, there was a buy iceberg there. And remember, this is the target. I can't trade this. And you might say, why can't you trade it? Well, I can trade it, but I don't have enough range. It doesn't qualify. So let me put it to you that way. The thing to understand about auction and market mechanics is that if this range from here to here was 10, 8, 10, 12 points, it's the same. The mechanics are the same. We are the ones who need range. The auction could care less. So what this is doing is mean reverting. So this is the mean in here. That's the reversion. And if we if this becomes too high in this auction, then the nature of the market is to come back here. So if we have a trade plan that understands the condition of the market and the potential to come back here, we could, if we chose, and it was vetted, so you had a statistical edge, to be selling this and scaling ahead of this, and then holding for the rotation to the other side. The goal in TraderLab is, number one, you only trade when you have an edge, and accept the outcome is random, who knows. And the other piece of that is getting risk neutral to fund your runner. So the worst that happens, assuming you don't take a full stop coming out out the door, is that you scratch. So from entry to before 38, so like 38.5, and you would not be filled here, you'd be unable, is your scale. It's very, to me, this is just like using a shoehorn and a scalpel. It's very hard. But, and where you're trying to go. If this is too high, this is retail, and now what's going to be too low? That's the question, assuming we get back here. So let's watch it. If you understand how the market works, you would be able to extract a trade out of this. The variable in this is the range required to qualify the trade. You can have all the pieces, and you can even learn to recognize it, which you would if you come to TraderLab and do the work, but you may not have an edge because it's too close. So you don't have a trade. You just sit here and, work on your crochet. Does that make sense? Does that make sense? Smith, I think, where do I see a 67% probability? It's in the statistics in the Bookmap Discard TraderLab, Zoltan. Agent Smith, yeah, the stop and iceberg detector is an add-on. You can go to bookmap.com. You can see all the different packages. This is requires MBO, market by order data from the CME. Rhythmic is one. I think CME provides it. Here's our target. Now, this is a structured trade, and I wouldn't take it. And there's only one reason. Because I have to be able to enter with a scalpel and get risk neutral here. And then the job of this trade is to go around. And where's my volume? Let's look at it. It's here. Right there. I'm gonna label this for us, and I'm gonna do a couple little things here to give you something to think about. This is called trading in fractals, and it is auction based. It is based on the participants. I don't use any indicators. And the reason is they don't work for me because they're random. And then we tend as human beings to try to fix it. The fixing is loading more on to create certainty. And if you come to TraderLab, I did a special recording about an hour and a half on the mental obstacles to becoming a professional trader. And it's most of us just don't get it. And it's not anybody's, quote, fault, because it's the last thing traders think about. Everybody goes to chat rooms and wants a setup. And the vendors are very smart. They'll say the one thing you need and how I made blankety blank just with this one thing, forget everything. I mean, that's called snake oil, guys. If you've been on the planet for a while, you should, I hope. I mean, it feeds on your desire and even desperation for success. It has nothing to do with the business of trading. It has to do with vendors making a buck off you, in my opinion. Now, there's always the thing, well, I got something out of it. How many chat rooms have you been in? And how much of that actually is really making you a better trader, or is it just all you're doing is swapping out randomness for randomness? This is a support area. Remember, mean reversion. This was the primary target, the mean for scaling. Now your stop stays at scratch. That's why you need the range from entry to failure is the distance, and this is the mean. So you'd be getting scaled right in front of this if you took this. And then if it comes back up, don't forget we have a statistic that suggests this is going to get taken out. Part of the real world of trading. Doesn't mean it will. Probably, using the word probability, will get taken out. Where's the stops for these guys and these guys? So these buyers had their stops under here because that's where the buyers took in over the sellers. These buyers in this leg have their stops under here. VWAP and mid are where stops are. And then we have, and I was going to outline some other locations. So we have this and this. We have where the buyers took over here. So if you took this trade, you're going to there and you're going into here. And then you got to see what happens at this high volume. And this is a structured trade in TraderLab. I'm just saying as I wouldn't take it because of range. If you, in a career in trading, there's thousands and thousands of trades, assuming you're in the business. It's not about compulsion for the dopamine fix, the excitement, the adrenaline deal. That's not what this business is about. This business is about the discipline to know where the trade might show up, what does it look like, and what are the parameters to qualify the trade. And for me, range. So I can't sell the high of anything. Somebody else could do that. Me, not so much. So if I get my structure at my locations that are already here, then when I break and I see the change that these buyers now are stuck and I got my icebergs, we're absorbing, and I have stopped divergence, all these pieces are coming together. Notice there's 53, 189 buy stops, 53, 44, 1. What's different? Higher with less. This is divergence. This is what I got from my indicator world. And there's my change in behavior. See the sellers? Now I come back. I have no clue. But I know what happened here now, and I know about this volume. I see my seller again. So I can be selling this if I can read it. If I can't, I have this. Same. But look at my range. You see what I'm saying? So all I'm trying to suggest here to you guys is you can learn this, and you should be narrating it continuously. The variable for us as retail traders is risk reward, not how the market works. You can learn, if you come to TraderLab, how the market works. And then build out a trade plan and then wait for the trade. It's like waiting for a bus. Notice we came to VWAP. Buyers are here. So what do you do with this trade? You'd be scaled. And if the trade comes back over here, then it's done. You'd scratch it out. That'd be the end of it. To me, that's okay. Now let me give you the other side of the trade. If you want to play the statistic up here, then you'd be looking for it to come outside somewhere. And this is an outside edge here. And this is an outside edge above here for a long. So it's this to this, and then maybe this back to this, mean reversion trading. I got to put a few more lines in here for you. This is support. See it? So now we can come down. So this is an area of support based on what happened here. So we're going to watch this. There was absorption here. And these are not trade recommendations. They are behavioral. In the TraderLab, the idea is you understand how the market works, why it does what it does, no indicators. Now, I'm not saying you don't. Would it make sense if you understood this? Then if you had an indicator, it might help you in this when you recognize the structure and now your indicator is giving you some assistance versus, do I sell this? Do I sell, where am I supposed to sell? Well, levels are here. How does your indicator know that? Does your indicator know that you needed to scale here? And then that this now is support, and then this is support. Right in here. I'm gonna throw a little line in there for us so we don't forget it. And the thing about it is, we cannot predict anything. I mean, wouldn't you like to have a crystal ball? On the trade desk, we had a magic 8 ball. And you say, should I get long or short? And I always said, ask again, because it's random. We can't predict anything. What we can do is understand what creates behavior. This right here is important. So we want to watch, remember, this outside area out here. And we also know that there's high volume in here, and this is a support area, maybe. And I love to use the term maybe because that's all you have in trading. But can you guys see the short out of here to mean revert? And now the ideas come out the other side somewhere. And now, since it's random, what do? Too high, seller, test, microstructure, sellers. My stop would be here. Now, watch. This is not a recommendation. This is how you can develop a trade management process. This is a fractal. Notice what happens here. I have my sellers. I have buyers here under the bus. The buyers try here. They can't get above this micro volume. Sellers take over again. Sellers. Now we're watching for what? I'm in an area. I'm outside. In mean reversion, this is where it is going to come from, some location. Right here, you could be right here. You got to watch that right there. Watch. And this trade could be over right here. Let's just see what it does. Buyers are here. Seller, they're above the sellers. Right here, we come above here and here, then you're coming here. Let's see. So right here, micro, let's watch. That there is your key location of behavior. Now, if we break below it, it keeps going. If we move, bounce off it, mean reversion. That's what's going on right here. Let's watch. Hope you're getting something out of this. Right here, we want to watch. There's the volume. If it comes above, north. If we can't get back above, Continue. Watch. Any questions in the meantime? And this is not a trade recommendation. It could do anything. If it breaks above here, there. If it continues lower and can't get above here, then we put another leg in, and then we look for the same behavior. So let's watch here. Are you guys tracking? Overnight V pocket. Overnight was a balanced market. Should we not be looking to trade outside in the market rather than away from V pocket? James, I'm not sure what you're asking. We opened near V pocket overnight was a balanced market. Should we not be looking to trade outside? Outside in, you would be. If you're in balance, you would be looking for outside in. Notice the change in behavior, guys. Can you see how you can use an understanding of market mechanics? And this is where we're looking for here, not a recommendation. Now, there's no range. You can't trade. Well, I can't. But if you spend your time sitting in front of a monitor, what are you doing? How about training yourself to read this? So when the range fits the parameters of your edge, what you need to pay for the risk, that you understand what might be happening, might underline, because it's random. If there is enough range based on where you enter to this, and I call these obstacles for the scale, then your next you'd be holding a runner out somewhere, right? As soon as you see this, which I just identified for you, the microstructure, and you break above it, the trade's over. I mean, I don't know if you want to be fiddling around with this. You know, it's not, but what you can learn from this today is how to trade. If that's what you're interested in. And I'm not saying this is the only way to do it, but I think this is about as close to where the rubber meets the road. This is combining order flow with the auction. So the order flow is, I'm understanding, because now I understand order flow and I have a tool where I can see exhaustion. You see how we have sellers, sell stops, and what's here? 4. Is that useful? What is that? Divergence. The only thing I use from indicator world. Divergence. If I got less of something at a lower price, that's divergence. Now what? Volume. Where is it? Right there. Right there. Let's look at it. And so when I'm watching the market, and again, it can just be a little rotation. There's nothing perfect. Don't you wish here? So this, and this here was from previous, so I know it's important. I have this one and I have this. All I know is they mean something. I don't know what's going to happen, so let's forget about that. I have divergence. I have my sellers. Looking good, Lewis. And I pause. I get another seller here, and there's my volume right there. I break above the volume. I pull back to it. I might still pull back to it, but this is the area. I'm out. I don't even think about it. Because now, if I hold this volume, I'm coming here. Let's see if it does it. And now the reason I want to impress upon you what might happen, number one, I don't know what will happen, but if it does happen, you will have spent some good time here today because you'll understand why, which is something you may not understand because you think this is a business of lagging, backwards looking price-based derivative indicators. It is not. The indicators are the output of the participant behavior. The auction is the participant behavior. It's in real time. And order flow brings you where the rubber meets the road. It is in real time. So let's watch this level here. So this out here to here is the same as this back to here. So this, if this is too low, who knows? Then the potential is to come here. Any questions, guys? And remember, if you're visiting in YouTube, please give a thumb up. Let your buddies know about the Bookmap Discord TraderLab community. There's no cost to be part of this community. It is for developing traders, no matter how long you have been in the business. I've been doing this going on 45 years. I am and always will be a developing trader because I'm always looking to improve, to just do a better job, to enter with a little more, a little better, shave 1 or 2 ticks here and there, and just keep going. I mean, this is not a business where, boom, you're there. It's a business of incremental improvement. And a lot of that improvement has to do with managing your psychology. And then once you understand trades, just putting a trade on and dealing with your fear. If you understand and can develop confidence, and the way you get confidence is through vetting. Vetting means probabilities. Vetting is the way casinos operate. They only play games that have a statistical edge. They don't control the cards coming out of the deck or how the gamblers play the cards. They only control how they play the game. They don't know. Is the next hand, is somebody walking out with a suitcase of cash? Well, how about this? Suppose the last hand, somebody walks out with a suitcase with $100,000 in it. Are they now going to make blackjack 10 cards instead of 7? Because emotionally they're attached to the loss they took? They're living in the past? They're not playing their game? Of course they wouldn't do it. Why do we do it? Why do we change our behavior in the present based on what happened in the past? Why, if we take a loss, do we change how we manage our trade because of what happened in the last trade, not what's happening right now? Why would somebody take this long if they were in TraderLab, if there was enough range, because this was the target? Do you know why? Do you want to know why? If you're interested, click the link in the bottom of YouTube. Open invitation. And there's no cost for this. While it is still no cost, I invite you to take advantage of it. One never knows how long this will continue. If you're interested in the TraderLab, click the link in the bottom of YouTube. Give a thumb up in YouTube. Support the channel. Tell your friends about it who are traders. If they're not getting the success they're striving and they're experiencing Trader Groundhog Day, that is trying to fix something, let's work hard. Let's make it better. I spent years doing that. I didn't understand what I believed, which was I can make it better, was actually a defective process I was trying to fix. So therefore, maybe that's not the solution. Maybe it's part of the problem. And if you're interested in TraderLab, use the link in the bottom of YouTube. Say hi. By the way, remember, statistically high probability. So this is the way you can operate with this is subject to how you're trading. Outside in, manage the trade. Next, where's the obstacle? Here. And high probability based on and past performance not indicative of future results that we're going to take this out. Your trade plan would be telling you you could take the short from here to here to here, or the long from here to here, going for that. And what was that probability? You wrote these down at the top of the stream, right? 67% probability we take this out during the RTH session. Now, here's the beauty of randomness. We don't know how, we don't know if, and we don't know when. So even though we have a high probability of taking this out, here's how you might play this. If you're long and you get a sell, you just exit your long. Or you're just trading rotations, you're short to there, out to here. You're long from here back to here. And you're done up here, or you're trailing for the statistic. What's your game plan? This is TraderLab. Please give a thumb up on the way out. Appreciate it. This stream is available exclusively to Bookmap Discord TraderLab participants for screenshots, circles, arrows, review, etc. Thanks again for visiting TraderLab. If you're interested in downloading the PDFs of the structured trades, this is what they look like. You can access this, plus the library of webinars, and become part of a serious community of traders who are looking to leverage their collective experience to do better. We all are the same. We all start out the same way. If you're not getting the results, yet you're working hard, maybe it has nothing to do with you. Maybe you're not in alignment with the actual business of trading. Thanks again for visiting TraderLab. Appreciate the thumb up. Look forward to seeing you soon.